All right, what's up, squad? Welcome back to a new video. In this video, we're going to be doing a monthly recap here on the month of February 2025. It's been a great month. Really has been. I have been trading every session, so I've been on the board quite a bit this month. And just to open it up, I mean, going into February was one of those months where last year during February we kind of had a bit of a stumble. We had the roughest month of the year, dealt with a lot of adversity, but at the end of it all, learned a lot and continued pushing forward to have pretty much my best year ever last year in terms of trading. Now, a lot was learned. That was 12 full months ago. We've had a lot of chart time since then. We've had a lot of wins, a lot of losses, and just a lot of experience since February last year. And, we came and we showed up this year for sure. So we are going to go over February. We're going to go over from the first trade I took all the way to the last trade. I did trade very early in the month, and I also traded up until the last day of the month. So we'll go over the stats here and let's take a look at it. So we have total so far we have about an 86% win rate in February, right? I've got the dates up here, February 1 to March 1. And just a recap of January. January was just one of those amazing months too. I've been off to a really good start this year. I've been really seeing the markets well. I've also been trading multiple sessions, and I feel like that has had a major part and a piece of how well I've been doing this year. One of the big things I've learned, a little side note here, is showing up for Asian session, London session, and New York. One of the real big concepts that I've kind of created and developed, in which has helped me follow price and stay in the flow of the market, has really been the concept that we call in the Clubhouse, building out the daily candle. So how do you build out that daily candle? Well, when you're around, and I'm not encouraging anyone to trade multiple sessions, like trade what's best for your schedule, right? But in the Clubhouse, we live stream every single session, and I just like to be a part of it. I like to be around. I like to be surrounded by the winners, and we go over a lot of great things during these sessions, and we get to learn a lot, right? So ultimately, it's shaped me into a trader. It's given me a lot more chart time, and I've been able to kind of build out this daily candle. So that's one thing that's really helped me, is kind of using the 4 hour to help me build out where the daily wants to go session by session. Again, has just really tightened up my read on the market, and I think that's why I've been seeing such good results so far this year. So last year was great, but this year I feel like I'm just a little bit of a step ahead, if that makes sense. So anyway, let's go back to February here. Let's talk about up here on the top. Now, this is a combination of all my trading. So these are all my accounts. I currently do have 5 XFAs with Top Step right now. I just took a payout. I'm ready to take another payout here. You'll see a video following this one talking about that payout. But let's go over, what we got going on here this month. So P&L has been great, very, very good, very happy and satisfied with that. The win rate, though, 86% win rate in February has just been amazing, right? This is 33 wins, 5 losses in the whole entire month. So seriously dialed in at this point, only taking the best trades. We did a webinar today within the Clubhouse, and Rafi was asking, hey, what's one of the perspective shifts that has taken place, right? And I answered, as well as some of the chat, but I said, hey, I'm no longer focused on trying to be the best trader. I'm really focused now on trying to be the best example of what an 8-figure trader looks like. We have a rally call here at TTE, and we are marching towards that 8-figure trader mark. And, the 8-figure trader is really more so about a mentality over a P&L, right? And having that mentality, having that approach as you come to the desk every day. day. One of the big things for me as the host of the live stream and the host of the Clubhouse, right, is to really just be the best example I can be. So that way the traders within the community can see that result that is based off of those actions and those habits that I come to the desk with on a daily basis. So it's more so not about me being the greatest trader, but me being the greatest example of what a great trader does and looks like. So that has been pretty awesome. So 86% win rate here. I got an 88% win rate on the daily win. So this is big for me. I've always prided myself on keeping the profits that I make during the day. Just during my journey, a lot of you guys know my story, but during my journey early on, I would always give the profits back. It always happens. So at this point, I pride myself on when I do make profits, I'm keeping them, right? And that's what I've been able to do this month and last month and, pretty much for the last couple months here. So if you guys have been following me, my average win to loss is continuing to increase, man, continuing to increase. So a lot of the Quakers and stuff like that on the live stream, like last year, the year before, you guys would be proud of me now, man. I used to just be a 1R trader at best, and now my my RR's kind of gaining some traction here now, right? You can see that 3R about, average winner 1300, average loser about 446. So just increasing, just really taking a look at edge. Most traders, when they come and they think about RR, they're talking about extending their TPs or lowering their stop losses, but that's really not the way I look at RR. If you guys don't know, come to the live streams, get in the Clubhouse, get my philosophy on what RR means. And typically for me, I am going to adjust size and RR according to conditions in the market. So if the conditions are heavily in my favor, I will increase size, and therefore my RR will continue to jump, right? And if there's a setup there, but the markets aren't quite fitting my perfect trade, I will decrease my RR, right? And I will recognize that, hey, there's not as much edge, right? The setup is there, the entry is here, but there's not as much edge in the market currently with the conditions that we see. Therefore, I will lower my size. So just that in return will allow you to kind of switch up your RR based off of how much edge is in the market. And I believe that that's really helped me out this year so far. So let's take a look here. The climb has been great. So this is February 1st. Took a little dip. We'll talk about that, and kind of just steadily moved our way up, taking really good trades, 1 to 3 trades a day, hit a little loss here, and then just continue making the way back up. So as you can see here, again, the RR has changed. Our winners are looking pretty good. Our losers are looking excellent, right? Big day here. But just as you can see, I'm very steady, right? Very steady averaging here, give or take up or down a little bit, but my green days aren't massive. Of course, you're going to have that one random base hit, home run here among these base hits and doubles, and that's what healthy trading should look like. So all I'm doing is following my system. I promise you, I'm nobody special. I just understand how to operate the system, how to execute. Like my only job here is to execute on the data that I currently have collected over the last 3 years and let that data take me to the promised land. So my playbook makes me look good, I promise you. And if you haven't checked out my playbook video, go check it out here. I will drop it down at some point in this video, but it's called the Playbook 2.0. That's exactly a video of how I view the markets, my mentality as I approach the markets, what my setups look like, what my entries look like, and that's an excellent video for you to go into, dive into, and really study and pick apart. So check out that video, the Playbook 2.0, and let's go ahead and dive into it, man. So let's take a look here. I've got a pretty good score there with TradeZella. I definitely do love to see that. But, we started it off here on Sunday. So Sunday was the second day of the month. This was an Asian session trade, right? So this is one trade. Let's open it up here. It was a short there on gold. And this is a pretty good position. We were waiting for the range here for the most part. Let's open this up. You had price kind of move down a bit. And during that time that we moved down, we noticed that price has been coming from the downside, right? So we did break down here, we did push below, and price was heavily bearish at that point. And so at that point, once I see this bullish candle here, I am not looking for buys, right? Anything below 28.27 there for me was still clean for the bearish move. So I just needed to see a resistance form, which you did form that resistance right here. So this would be considered the onion play. That was the confirmation candle also closing below the bodies of this candle, right? If we drew a little support there, it would look something like this. So you see the candle now closing below the range, which is exactly what I'm looking for. It also left a wick to the downside, which was extremely important. And this trade was taken on the break of the current candle lows, and that was the move there, and I was out of that trade. So beautiful trade to kick the month off. Heavily bearish there on gold that day, and all in all, that worked out perfectly. So that was the first trade of the month there. That was taken in the Asian session, I believe, with the community. So let's go over. So Monday, let's talk about Monday for a sec here. Doesn't look like I did much on Mondays, right? Here in February, no trade day, right? Red day here, no trade day on the 17th, no trade day on the 24th. So didn't really do much on Mondays. That's not really a part of my plan. I don't sit out on Mondays. It's not that I'm saying, hey, you know, like I'm not looking for trades. Just in February this month or this time, just happened to find nothing there on Monday. So Monday morning, nothing much. On the 3rd, skipped over to Tuesday. Tuesday, we found two excellent trades here. So let's take a look at the first one. This was a onion position, which we call basically a buy position taken off support. So let's go over this one here. So pretty much we were obviously bullish, right? And you never really want to take, or me personally, when price runs up this much, I don't want to take a buy, you know, up here where you get that initial breakout, right? So you have like this resistance over here, which this candle did close above, but at that point I'm not going to take buys here, right? I'm going to wait for some sort of a pullback, right? Let price create support and then look to take buys, as we did have clean range coming up towards that high there. So this position was taken. This was patience here, right? So it takes a lot to let this move go and then not execute on the next candle. So I knew I needed a support, and once I got that support, I would be good to go ahead and continue this bullish ride up here. So if you can see here in the yellow, we did create support. This was my confirmation candle, right? This closure here. Also, notice how we were rallying bullish. I want to make a point here, right? We were rallying bullish, and then this red candle closes, right? Now, as a trader, everyone's looking to call the top. Everyone's looking to take sells and look to short the market after this big push up. And notice how this candle came down, broke the previous lows, and then moved up and closed bullish, right? So the higher time frame and following the bias, following the trend is so important here, because what this did was this grabbed a lot of liquidity, right? A lot of sellers activated somewhere along the lines here, whether it was in the middle of the flip and the break of these lows. You have sellers entering the market there. Price continues moving bullish. This trade was a trade that maybe I used to be in 2 years ago, right? First sign of that bearish closure here. Okay, perfect. Let's sell the market. And then boom, that support gets formed. So I don't do that anymore. I now continue to ride the trend up. I waited for this support to form here, get this strong bearish closure. I understand that the liquidity has been grabbed here. And then the next candle is my entry, right? And my target is somewhere over here. And that's where you see price kind of move up, close very strong bullish on this candle, and then that candle went up and finished the job. So another beautiful playbook position taken during high volume time. As you can see, this trade was taken at 9:15. So we know when the volume's coming into the market. We know that 9 o'clock should set things up. 9:15 should get it going, and then 9:30 should really get ripping. So that's one of our favorite times to trade there. So another beautiful trade, 2,300 on that one. So really nice trade taken there on the 4th of February. I think there was one more. It might have been the same trade. Yeah, same trade here, I believe. So let's move on to the 5th day here. So 3 trades were taken here. All 3 were winners. Let's go ahead and take a look. This first trade was a long position taken on gold. So let's open it up. And let's take a look. So this was a celery position. So as you can see, price was moving down pretty heavily here. Didn't really want to take too much sells. And then you had this candle close bullish. Next one pushes down, but then we start creating support, right? So I didn't want to take any buys from over here because we're still very bearish, right? So needed some sort of what I like to call like a range 2 breakout, or just like a break and retest where price kind of comes up, comes down, comes up here, retest it, and at that point it should get going, right? So when it doesn't, I don't want to take the buys just yet. I'd rather wait for a new closure above a retest. Now you're closing above that previous range that was made, and then you can move up, especially with all that clean range to the left. Sorry about all the arrows here, right? So you got clean range to the left. You have a brand new support that's been formed right here. You have this candle, this green candle here, closing above the zone, creating a nice support. Clean traffic to the left, and then that was my entry candle. So as you began to break the highs on this candle, we call that the celery play. You broke the highs here, you began to move up, came a little bit back into drawdown, but ultimately continued to fire away. And then my partials was taken right here at that resistance level right there, and I was pretty much out of that trade. So just had a little runner that continued on that day, but that was the trade taken there on the 5th. On the 5th. So let's move on to the next trade on the 5th. So this was also a buy position taken. This was going to be taken a little bit later, I believe, in pre-New York. So this trade was taken after everything went down. This was on gold 15-minute time frame. You had price moving down here, create this resistance, start pushing down. Then you get this really strong bullish candle. Right now, in this trade, what was taking place was the 4-hour candle was tapping into a support, right? Tapping into a hard, ready to basically a hit target. So at that point, it was getting ready to pull back. And I always like to try and see if I can take positions and go long here for those pullbacks. So that was the 4-hour candle kind of tapping its target. Then we closed strong bullish with this candle. I know that we can most likely get up here, if not, continue moving up to give this candle a top wick. So that was the trade. The trade was taken. Entry was right here. Once this strong engulfing candle closed, the entry was taken. Partials was closed right there, 80%. And then, I'm not even too sure what happened with the rest of that trade. So I think we ended up rejecting there, but ultimately, continuing up bullish. So another trade, another base hit position taken there. So let's get rid of this. Let's get rid of this. And let's go back here. So was there one more? Yes. No. Let's move on to the 6th of February here now. Let's go back here. Or I should say the 7th here. So now we come into Friday, right? So Friday comes in, we take one trade here. So this was the trade taken on Friday. So again, another sell off of resistance here, right? You had a strong rejection to the top side. You had candles create resistance. This was, my stops are considered up here and then pushing down towards this support. So another great trade, very easy. As you can see, as you follow my trades, you'll notice that they're all pretty much the same exact positions, right? Are you beginning to catch on and follow on to, hey, this guy Nick really only trades like 3 or 4 types of setups, and that's it. And I think that's the most simplest way to approach trading. Trading could be very complicated, so why not make it as simple as possible? And that's what I've been able to do with this playbook that I use here. So let's move on. So that was the week. That was week 1, and week 1 produced about $12,000. It was a good week. Traded 5 days out of the week, out of the pretty much 6 days here with Asian, and then we moved on. So the weekend came about, and now here comes Monday. So Monday I did finish red here, but let's take a look at the red trades here. So first trade, it was about like a break-even position. So Monday, so let's take a look at it. So as price was moving up, I felt like, hey, maybe we hit target here. Moving up, you had price kind of closing really, really weak bullish after filling this whole entire range to the left. And, we were very bullish. So I wanted to give this a shot to see if it can keep pumping. It kind of started giving up right here, so I just moved my stop loss to my entry point, and at that, it got hit at break even. So that was pretty much just a break even trade there. Let's go on to the next one, but I believe this was a losing trade. One sec. So okay, so let's take a look at this one. Lost $323 here. So this was the trade taken. It was a long position on gold, and what do you know? It was a trade that was taken in the range, right? So during that day, or during that time, pretty much gold was playing this range game here. So we were obviously chopping around on all these candles, but sitting around for the New York session, we got this big rejection at 9 a.m. right before the open. So I felt pretty good about this. I mean, this is a 30-minute time frame, as you can see up here. I felt good about the wick fill. Price did end up filling that wick, by the way. So we ended up moving up, going into profit, and you just kind of coming back down, right? And all of a sudden price came down, hit my stop loss, and basically started pushing back up. So eventually we did go ahead and fill that wick. So it's not a bad trade. I mean, I think it was a little bit aggressive. It was still within this range, but again, it was at 9:30. There was a high volume time, so I can hold my head high at that loss and just say, you know what, it was in the range, but we had the read on direction. Stop loss may have been too tight, and then I could just move on, right? So that was that trade. That was it. Kept the losses small, didn't try and do too much. Closed up shop at 9:30 that day, and then just continued on with my day, right? So now we move on to Tuesday. Tuesday was the biggest day of the month here. So let's take a look at Tuesday. We were trading pretty much all sessions, so ended up being able to take trades at London, pre-New York, and New York session here. So let's take a look at the London position first. This was taken pre-London. This was a fade position that was taken. We had tap target. As you can see, this candles were moving down, right? Create resistance, and then you get this big push down, right? So you get this big push down, and we didn't really close below it, and we're overextended. So I kind of didn't want to take any type of short position. I wanted to use this zone right here as just an observation zone, just to see how price is going to react, because the 4-hour was still bearish, but we were filling this wick over here to the left hand side. We were kind of coming into the zone, so I just wanted to be patient here and see how we would close, right? So the one thing I was looking for was rejection, and if we could find rejection out of this overall zone here, then I was going to look to go long to kind of go ahead and counter trend this to see if I can get the push back up during the pre-London volume, right? So that's basically exactly what happened. So as you can see here, this bullish candle closed. The trade was taken, the bearish candle closed. It had a very small wick on the top. We came down, we pushed down out of that zone. So as this next candle came down here, and it never broke below this wick here, right? That was my opportunity to say, hey, if we start pushing back up now and break that previous candle high, there is a good shot that we can continue moving up, and that was exactly what happened. So entry was taken here, pushed up, closed, next candle moved up, and that was it. Partials was taken, and then price did come back down, hit the rest of it at break even, but I did get to close 80% of that position, making like $2,900 on this one. So that was a big trade for me, so that really helped out. So let's go. That was the London session. Now let's move on to the New York session trade. Pre-New York. So this was a pre-New York. So by the way, shout out to Magnus in the London session. Really called this trade well, understood this trade. A lot of the traders in the Clubhouse London stream called this, and then our next session began for pre-New York, right? So that's when Johnny Gems comes in. If you guys, all y'all should know Johnny Gems at this point, right? Co-host of the New York live stream, been doing this with me side by side now for almost 3 years, man. And when they call him Gems, they don't call him Gems for no reason. So he was looking at the market. We were in the pre-London session. He was hosting. We were looking for sells. This was a beautiful position taken. Made $3,200 on this position here, man. So check this out. This was a short position. Let's open it up. Short position taken. you can see here we're very bearish on gold, right? Very, very bearish on gold. And now price is consolidating, right? We look left, we see that there's major supports here. We're waiting now. We're just waiting on a closure. Not really looking to entertain any longs here today, right? It's very, very nasty. We're very bearish. So waiting for a closure below this zone right here. You have a strong bearish closure here for 6 a.m. And now we know that the volume is coming in, right? So you have this wick over here to fill. We're paying attention. We're waiting for this candle to come up to make that top wick. Once that top wick has been formed, the sell stops are placed on the break of the current candle low. And this thing just drove down beautifully. So that was one of the best trades of the month here, where it was just too easy, right? You had beautiful closures, beautiful top wick, wick to fill, pre-New York volume coming in. And that one was a beautiful, beautiful breakout play. So that was the pre-London position that added to what was already a great day. And now let's move on to the next trade here. This was in the New York session. This was in the New York session here. So that was just a that was just a runner. That little negative 26, that was a part of that other trade. Let's go ahead and take a look at the big one here as well. So this was 2,900. This was a breakout that popped off a little bit later on in the New York session, where you get I think I had a better look on a different time frame. This is the 15-minute time frame, but ultimately you had a strong support form on 30-minute time frame, and then you had price kind of wick down, grab the lows, and then break, push up and right up into that previous zone, and that was it. Most of the time I'm out of the position here because my thought is we're probably going to move down, create resistance somewhere along this previous range, and then continue driving back down. So that was the position for me, in and out. Another great trade taken. So let's move on now to Wednesday here, and we'll probably go over most of the trades. I don't want to make this a super long video. Let's go over Wednesday. Another good day. As you can see, taking little base hits. Let's go over the $1,800 one. Just once again, another buy off support in a bullish trend. 4 hour clearly moving bullish. You have support form here, break of the highs, bada bing, bada boom, targeting those highs and out of that trade. So another really good trade taken, $1,800 made on that position there. So let's move on to the next trade taken that day, which was, let me get rid of these, which was basically just another same deal, right? This was a sell now, taken off resistance. So price had made some new plans, ended up moving down, consolidating. This was on NQ, broke the lows and moved down, targeting that support there. So as you guys can see, my trades are very quick. They're basically 30-minute candles and closing within, I think so far here, if we look at the time, it's been about anywhere from 5 minutes to over here from 5 minutes to about 12 minutes have been my positions here. So yeah, so kind of in and out of the markets, counting on the volume, banking on the volume here. Let's take a look at the 13th. Let's just look at one or two of these. This one was taken during pre-New York. So this is a beautiful position. You had price kind of breaking out here. Let's take a look. Can we zoom in on that? No. So we had price breakout, waited for this lower wick, kept stops below here, and ultimately started pushing up on that one. So I was risking about 1,800, closed about 2,100 on that trade. Yeah, about $2,000. This is what it looked like from a different perspective. And yeah, basically was looking to fill that range there. So closed 80%, and then I do believe the rest continued on that day. So that was the 13th. Let's move on to the 14th here, which was a Friday. So another good day. Did take a loss here on the Friday. Let's take a look at this winning trade. This was another breakout position. Let me see. Let me make sure. Let's go to that loss right here. Let's take a look. So this was an onion position, right? So this is an onion play. I'm sorry, a breakout here. So price ended up kind of pushing up. Was unable to close partials, and then we just came back down and got stopped out. So I think I was targeting something over here to the left that we didn't quite reach yet, and then ended up coming down. It was a long position taken. So okay, so let's move over to the 19th, because the 19th is where I took the bigger loss here. So this was one trade, one losing trade here. Let's take a look. It was a long position taken on gold. And, you know, this was a trade that I probably would take over and over again, right? I wasn't upset about this loss at all. You basically had price kind of consolidating for a little bit here and just chopping around. You had this beautiful engulfing candle like close. Now, in my opinion, it may have been a little bit too overextended at that point, kind of like more of a mid-range trade. Would have been nice if the candle could have closed a little bit lower there, but all in all, did feel good about that position. Was looking to target this resistance right here, and you know, ultimately we fell just shy, right? So it looks like price kind of came right into that zone there and then just kind of push back. So did end up taking a full loss on this trade. It was probably my only full loss in the last month or so. So most of my trades when it comes to losses have been managed, but in this case, just having to take a full loss on this one. And then look, I just ended my day there, right? I just ended the day right there, negative 1400. Didn't try and get it all back. Didn't try and revenge trade. Didn't try and, you know, get back to break even or any of that. Took my very simple loss, called it a day, and moved on to the next day, right? Moving on to Friday here, which is the 21st. This was a beautiful sell position taken with the London squad. We just had such a good read on the market here. Knew how bearish price was. We did not budge on any of this wick nonsense here. We did not take these buys. In most traders here would have taken these buys, but let me tell you why we didn't. So when it comes to higher time frame, lower time frame correlation, right? We see this big red candle come down, right? It comes all the way down here, continues coming down, and that candle, my friend, is, if we're talking about the 4-hour time frame here, that's the previous 4-hour candle driving down and then beginning to pull back up, so that way it closes something like this, right? So if this is the 4-hour chart, 4-hour, and this is the 30-minute chart, right? So this is what it looks like. You have the candle, it moved down very, very heavily, right? This candle moved down, it came back up. So we moved down, right? And then we come back up. So now the next candle on the 4-hour has to open up, right? So you see these two candles right here, those two green candles right here, 1 and 2. Right, where most of the time buyers are going to start to look for to go long here now, right? But they're failing to realize that on the lower time frame, on the higher time frame, that's just the 4-hour candle making its top wick, right? The 4-hour candle still bearish here, looking to move down. So we continue to keep our bearish bias over here on the 30-minute time frame that day. We did not jump into or try and jump into these longs here. We waited, right? And what were we waiting for? We were waiting for a resistance. We're waiting for some sort of a fake out, like a candle to close back below this yellow area here. So what do you know? Here it comes, shows up right here. So you get this candle to close. This is London open, as you can see, 3 a.m. here, and the trade was taken on this candle here. So you have your confirmation candle, resistance being formed, indicating that this 4-hour candle has officially made its top wick, and then we enter off that volume, and yeah, full TP was right here for me, and that was a beautiful trade. This may be the best trade of the month. Best trade of the month. I know I said that 1 or 2 times, but this was certainly an amazing trade. Worked out quickly. For me, I had partial TP right at this wick fill, and then my full target was over here at that support. So another amazing trade taken. And again, as you can see, you're continuing to see a repeated process out of me and my trading. You're continuing to see confirmation candles, trading candles, and the playbook is continuing to work really well and make me look good, especially during times of volume, right? So that was on the 21st there, so I believe that was the Friday, right? So cool. So let's quickly speed through the last couple days. So again, last week of the month, the 24th here on a Monday, stayed flat, didn't take any trades. There was just nothing that presented itself. So moving on to the 25th now, you've got NQ trade here. So went long on NQ. This is a beautiful position taken. Again, another buy position taken off of support here. So you had price kind of moving down. We're hitting now, we're tapping into a major higher time frame support level. I don't take the buys here. I let them go. I let price come down. Make sure that we're going to reject off here. You have that break of the low. That's my indicator. That's my confirmation candle. And then this one is my trading candle. So that was that position. This was also a 30-minute fade position taken. It looks like a 15-minute onion. So if you're wondering, hey man, how come you took that trade with no lower wick? Just keep in mind that this was a fade position. So this was also price kind of doing something like this, moving down, right? Kind of closing like that, and then the next candle breaking up and pushing through the high. So that was another wonderful position, and that was on the 25th here. Let's see, let's go here, 25th. Yeah, so perfect. So let's move on to the 26th now. So this was Wednesday this week. So you had both positions taken were long positions. Let's take a look at the London session trade. So this trade was taken in London, another impulse entry taken during London Open, as you can see here. Getting a little aggressive here on one of my XFAs that day, where basically was looking for price to close back above. Again, we were in a major targeted area. You had a breakout, didn't take these buys, waited for price to come down, confirmed that we were going to stay below the range. And as price kind of made its low, it broke the previous lows, right? Therefore, it should be driving down. It should not move up and break its own high. So once it did, that was me, man. That was my opportunity to go ahead and take that position on the break of the high. And yeah, we pushed up. We did close above here, and price continued to move up that day. So again, had a really good read on the market. After that closure above, that's when I believe the rest of the London squad got in and then took their TP right here. My runner continued on, and that was really, really nice trade. So again, understanding how to follow price, trading multiple sessions has really played a factor here in this year's results so far. So $1,000 on that trade. That was the 26th. Let's move on. I think there was one more trade. I think this was during the New York session. Let's take a look here. Yeah, so this was during the New York session. So continued to remain bullish, right? This is where we took the last trade down here. Continue to remain bullish. This over here was your previous 4-hour high, previous daily high. We had a breakout. We had clean traffic to the left-hand side. So I did feel comfortable about taking this trade. I know it does look overextended, but if you go back and check out the weekly review video that I'll drop, but put it right here somewhere. Check out that video. You'll get a full understanding on why we took this trade. The reason why we took this trade in layman's terms in short form here is because the previous 4-hour candle looked like this, right? This was also your daily candle high plus your previous 4-hour candle high. The current 4-hour candle looked like this, right? So price was coming up and breaking these highs here there, and we were extremely bullish, right? We were coming up from the downside here on gold, extremely bullish. As you know, gold is very, very bullish. And boom, so as the 4 hours breaking the previous high and the daily high, this is what it looked like here on the lower time frame. That was your high, and I was just open for that trade, and that 4-hour did continue moving up, and this did turn out to be one heck of a trade there. So another great trade taken, $640, little low. So notice how I lowered my contract size here, only traded 2 contracts because we were pretty overextended at that point, and I had already taken a winning position there in London session. So that was the 26th. Let's move on to the 27th. This was one trade taken. This was a long position also taken in London session, and this is what that one looked like. You had price moving down, as you can see, again and again and again here on gold, right? Hitting these targets on the higher time frame, waiting for consolidation, entering the trade, and then moving on up, and another great position. So as you can see, man, you guys remember I took the loss on one of my losses here. It was a bit overextended. I'm not afraid to continue to execute on these trades, especially when we are in these higher time frame targeted areas. So just because I took one loss on a position that looked like this doesn't mean I'm staying out, right? I know that this position is going to have like a 70% win rate. Therefore, I am willing to execute on that all day, every day. So that was the second to last trade, I believe, of the month. And then here is the last one. So last 2 trades taken. This was both trades were taken in London session, same exact position here. Just a beautiful move to end the month off. It was a short position. Again, another beautiful trade called by Magnus here. So short position taken on the break of the low there. We were very bearish. Price came up, right? You had this 4-hour candle creating the top wick. We waited for that resistance. As that resistance was formed right here, this became the signal we were looking for. This became the confirmation candle we were looking for there, and then that was the trading candle. So I closed full right at that support, and that was my month, man. Called it a day. Did hang out for the New York session that day, but didn't see anything to my liking, and that was the end of the month for me. So as you can see, gang, very, very steady incline moving up. When I did lose, I lost small. I continued to win, take my base hits, hit a couple, home runs, really just 1 or 2 home runs, I'd say, during the month. But see how I'm sticking to the same exact setups, right? Over and over and over again. So this is the result of being patient. This is the result of being disciplined. This is the result of approaching the desk with that 8-figure mentality and saying, hey, look, I know what I'm looking for today. And if it shows up, I will be in there. But if it does not show up exactly how I want it, then I'm not getting in. I'm not participating. And when you can get very stern like that and become a master negotiator like that within the markets, you will see a change in your trading. I promise, gang. So if you guys enjoyed this video, if you stuck around for the whole video, hey, leave a "I'm all in" comment, right? Comment "I'm all in." Actually, just comment "all in" all caps. Show some love. Give the video a like, and if you're looking for more videos, tune into the YouTube live streams. If you're looking for a magnificent community to be a part of, join the TT Clubhouse. Click the links in the description. Come vibe with us, come chill with us, and really come dial in your trading with us and get the opportunity to be around like-minded individuals who are all focused on moving forward. We're all focused on getting funded. We're all focused on getting paid out, and that's exactly what's taking place within the community. So I hope this video helps. If you guys have any questions, leave them in the comment section. Don't forget to comment "all in" if you're going all in on your dreams and your goals this year, gang. So I will see y'all in the next video. Deuces.